Record real quick.
Camera shot. Have one.
Okay, everyone. Well, thank you for joining us this morning for our small business seminar on the Employee Retention Tax Credit. So this, as you can probably tell, is a hybrid event. So we have some of our chamber members in the conference room and some on Zoom. So we will have questions at the end of the program. You're welcome to either type them in the chat box as the presentation is going, or at the end you can ask all of your questions by unmuting yourself or raising your hand, and then just please mute yourself again once you're done asking your question. So now it is my pleasure to introduce our speaker for today's event. Patrick Shurney of 3P Consulting helps business owners create consistent cash flow and increase net profits. After spending 30 years in the commercial banking industry, he started his own consulting practice 3 years ago. During the COVID-19 pandemic, Patrick helped over 300 businesses across the country obtain PPP loans. He is well versed in the various stimulus programs and consults with other professional and membership organizations, including law firms, CPA firms, Annapolis Business Recovery Task Force, the Howard County Chamber of Commerce, and the Central Maryland Chamber of Commerce. He's a member of the AICPA, which is the American Institute of Certified Public Accountants, and he has served on a variety of nonprofit boards. So thank you so much for being with us, Patrick.
Thanks, Christy. Well, welcome everybody. The presentation portion, I've learned to keep it short. So we'll do that and then really open it up to questions that you may have about your particular situation. And there is a handout that everybody will have. If they don't have it now, they'll get it at the conclusion of the meeting. There are hot links on there to the various government websites. And also, if you just wanted to kind of like if you just want to do a one-on-one call with me, there's a link there to my calendar. You can just set up a 15-minute call and we can talk about your situation. And so if you guys are okay, let's jump in. All right, so the employee retention credit has been around for a little bit. There's an alphabet soup of stuff that came out with the COVID CARES Act. Many people are familiar with PPP. That does not stand for 3P Consulting. Unfortunately, that stands for Payment Protection Plan, and that program was a lifeline to many small businesses. There was the SBA EIDL loan, there was the SBA EIDL grant, there was all of these things, and then there is the employee retention credit. And I do not process these personally because this is a very intricate qualification process. And I work with a local law firm, CPA firm out of Annapolis that is fully committed to this, probably has over 50 or 60 people last count that are working on this full time. And I just serve sort of as a conduit because I've helped so many people with these stimulus programs. And so I've created a little bit of a following doing that. But there are a lot of myths about it and the people that, they don't qualify and they really can. So we'll try to demystify that just a little bit for you and keep it somewhat high level. In general, if you have W-2 employees, so you have to have W-2 employees, it makes sense to consider this as long as you have a couple. If you have less than 3 or 4, maybe not. It's worth a conversation depending on how high paid they are. But in general, 3 to 5 is kind of the, should I consider this? And there's a reason for that. And that is mainly because, you might have to redo your taxes and some things like that. So, but for the most part, you are eligible up to about $26K per employee for a credit. And this is not a loan. This is not something you have to pay back. This is not anything with really the strings that some of the other programs had, which is pretty amazing. And it does have a sunsetting period over time. And so that full amount may not be available now for some people that are applying. And what you really need to know today is if you have a couple of employees that were W-2 back in 20 and 21, and you want to find out more, then I can speak with you separately and I can certainly connect you to the firm that is doing all the qualifications. Some things that I think is important to put up front before we get into the program. I put myself in your shoes and I'm thinking, okay, what's the catch? How much does it cost? So let's just get that out on the table early. And I think, and I will say reputable firms, but most firms are willing, and the firm I work with is willing to do all the pre-qualification and do all that to see if you qualify, before charging you anything, and typically it is a success fee that these firms charge. So let's say you get 100,000, they're going to quote you what they're going to charge, but we see people anywhere between the 10 and the 30% range of what they're charging. And I'm not quoting fees for this firm, but it's definitely on the lower end. And Matt is here today from Aflac, and he does these things too. And so I asked him to, either confirm or refute any of the information that I'm sharing.
Right.
But does that bandwidth sound about right? People are charging a success fee. And, as a business owner, right? I mean, if someone says, hey, you're going to get 100,000 and it's going to cost you 10 or 15, you just do the math net and you're like, fine. And they do all the work.
Right.
So the firm I work with is CPAs and lawyers. And what we're finding is a lot of people either don't know about the program, think it's gone away, or just think they don't qualify. And this is no offense to the CPA firms. It is such a specialty. Unless you do this full time, right, Matt? Unless someone's in it full time, you just don't know. And so the firm that I work with, a lot of their clients are actually CPA firms that are referring to them because it's just a specialty. It's a well-used analogy, but a foot doctor and a brain surgeon are the same thing, but you go to one or the other depending on what the problem you have because of their specialty. You don't want to go to the brain surgeon for a foot problem, or especially vice versa. No offense to the foot doctors. So I think that when it comes to this, just keep that in mind. And for those that are very detail oriented, I always like to put hot links in here. So there is a link to the U.S. Department of Treasury website. There's a link to the IRS website. And I'm just going to go over the qualifications real quick and then open it up for questions, if that sounds cool. And you can drop questions in the chat too, and we'll try to tackle them. So in general, these are general things, up to $26K per employee for W-2. And I wouldn't even say, there's so many industries that have qualified, whether it's restaurants or whether it is engineering firms or, you name it. And some of the credits can be gigantic. So let me give you an example. I had a firm that does commercial cleaning. So their employees, aren't on the higher paid end of employee pay, right? And this firm does about 3.5, 4 million a year in revenue. And during COVID, all the offices were closed, no professional office cleaning. I mean, his business, like many businesses, just got massively impacted. And we helped him get his ERC qualification. And this is not like a promise or anything, just a real case study. And he had like 30 employees, and his number was over $800,000.
Oh.
I have two feelings about that. As a person that helps businesses get that, I am super happy. As a taxpayer today, not so much, because as you know, inflation is very much tied to a lot of these stimulus programs that we've had. But my feeling is, at the end of the day, if you're going to be in this economy, you don't have a choice, and you're qualified for this program, why not? Some people don't want it. They don't feel like they deserve it, or they feel like, oh, I heard the IRS is going to hire, I don't know how many thousands of IRS agents, and they're going to audit everybody. And there may be some audits. There's fraud. There's always fraud. There's always bad players. So it is an individual decision. No one's here trying to, convince you otherwise. But I mean, I was pretty shocked that a company that did, $3.5, $4 million with 30 employees was getting 800,000. That's a game changer. Think about as a business to generate 800,000 in revenue and how much of, the margin eats into that. You maybe only make a net profit margin of 10, 20, 30% of that. But to get 800,000 right to your bottom line, that's pretty impactful. And for a smaller business to get 20,000. Look, I'll take, if someone offered me on this table today $100 for free, I'm taking it. So I mean, like, no shame, right? So if it's an available program and it's legitimate, then I think that's really helpful. So a lot of it comes down to, were you affected by COVID? And I had clients that said, well, we still had good revenue and everything was fine. But I was like, yeah, but did you get affected by government mandates? Did you get affected by supply chain issues? There's like hundreds of things. And it's not just a revenue play, even though at first that's what everybody thought. My revenue didn't go down enough. So even if your revenue didn't go down enough, but you had to, make a lot of adjustments for COVID. And I almost don't know anybody that didn't have to make adjustments for COVID, whether it was getting PPE stuff for your offices or having to do work from home stuff. If you could get it.
Mm-hmm.
But if you did have a decline in revenue, I put a couple things in there. There's some general rules. Don't hold me to every letter of the law here because this thing has been evolving and gets very specific. But if you had a drop in revenue in 2020 of 50% or more from a quarter over quarter, or in 2021 of 20%, much lower threshold, pretty much you're going to qualify. But most people qualify through the mandated full or partial shutdown rules. So I just said here, hey, if you had a full or partial shutdown, if you had a decrease in hours or operations, I just gave you 6 out of probably 100 different reasons. Interruption of your operations or supply chain. I had a lot of clients that just couldn't get stuff from China. They couldn't, the supply, they just couldn't get what they needed to serve clients. And a reduction in your goods or services, sanitation of your facilities, inability to work with vendors, all of those things. So, and then lastly, I'll just share this, is it worth a second look? If your accountant said, no, you don't qualify, I'm not trying to undermine your accountant or what have you. It's still your business, and it just may be worth a second look. And so I'm just putting that out there for you. The qualifications and calculations, as I mentioned, are extremely complicated and nuanced. And most accounting professionals, right now too, it's tax season. They're just so swamped. And, I like to work with a dedicated group of lawyers and CPAs that are doing this. It gives me a high level of confidence. Also, too, because they're lawyers, if your ERC money is because of a government mandated shutdown, they will likely give you an opinion letter. And the reason that's important is because if it's ever challenged by IRS agents, you had someone legitimate looking at this. And Matt, who is here, will tell you there's a lot of fly-by-night organizations out there doing this. And in a year or two, when ERC is over, they're going to be gone. And if someone gets audited, they're gone. So, the people I work with have been around a long time and will continue to be. So I feel good about that. So I'm gonna stop there. If you want to ask questions about your particular situation or anything else, I'm happy to open up the floor, or if we have anything in the chat. So thanks for listening in on that, and we'll open it up if anybody has anything. And then let me also say, if it's worth sticking around, I did spend 30 years in banking. I am doing a number of speaking engagements talking about all that's going on right now. You may have heard of some bank runs that we haven't seen in a long time, and a lot of uncertainty in the market. So if there's time at the end and you guys want me to address a little bit of that, I'll be happy to share. But let's open it up about ERC.
Can I share a little bit about
the
firm that I work with?
Yeah.
That was a great presentation. If people are wondering what is the biggest company, you can go up to what, 500, 499?
A number of employees, yep.
Right. But there is an aggregate. So I was working with a chamber member here actually, and they didn't think they qualified. And then we went through the qualification process. They qualified for the one business, but they owned 2 businesses. And the 2 businesses together was over 500. So they found out that they didn't qualify. But I had a couple chamber members that never heard of ERC, and they're getting $400,000 for their business of like 22 employees.
Such a game changer.
Right. So
yeah, so 22 employees, 400,000. Yeah, I mean,
right.
That's just
I have
a lot.
A painting company in Annapolis that I kept going back and forth with the business owner. He said, I'm not going to qualify. We made more revenue. We got both PPP loans forgiven. I'm like, yeah, but did COVID affect your business at all? He said, of course it did. So he went through the qualification process, saw the small fee that they were charging, and he goes, this is found money for me. So he's doing it. He's getting like $480,000.
Yeah. And think about it, if you have higher paid employees, like I helped this one law firm. I mean, those employees are a lot higher paid than a cleaning contractor employee. And so their dollars were significant. And then you might say, well, that's not fair. Those attorneys are already making money. But I'm just saying, like, depending on the salary of your employee, that's how much payroll taxes you're paying. So it's based on your payroll taxes.
Another thing, if it's a family-owned business, the family does not qualify. So like my first client was one of my client of mine at a dentist office who was owned by a husband and wife. They don't qualify, but their 8 employees qualified. They got both PPP loans forgiven, but they're getting $160,000.
It's a great point. Thank you for that. Yeah, because the business owner is excluded from the calculation.
And I said to her, she goes, yeah, I did the PP loans on my own and it took so much time. I said, well, they'll do everything for you. They're IRS compliant. They have proprietary software. And I said, when you get the money, you can do, whatever you want. And she said, I'm going to give it to my employees.
You know what? I talked to my brother about this, and he said the thing he doesn't like about ERC, and I'm not going to share like the whole backstory on this, but he just was like, it's going to the business owners, not to the employees. And I said, well, the business owner can share it with the employees if they want to. And he goes, well, they should have mandated that. And I said, well,
Right.
oh well, what can I say?
Yeah, and I think the only tax implications are if there's certain things you can use that money for, but if you get the money and decide to buy a boat, well, I think there's tax implications there for the business owners, but I'm not a CPA, so.
Yeah, and I'm not either. I am a member of the AICPA, but I want to tell everybody I am not a CPA. Nothing wrong with being one, or if I was one, I'm just not. So don't want to misrepresent, the guidance I'm giving you. And I always say, talk to your CPA, of course. And if you have a lawyer, talk to them as well. These are your advisors.
And you talked about the fly-by-night thing. So the firm that I'm associated with, partnering with, they have 400 CPAs doing this specifically, and they built proprietary software that's IRS compliant. Because I guess the laws change, monthly.
I said they evolve.
Right. So far they've helped 12,000 businesses get $5 billion. And one of these fly-by-night companies, the IRS announced like 2 weeks ago that if your 941 Form X is not signed by a CPA or a tax attorney, you will be audited.
Wonderful.
So this CPA firm that was advertising, oh, we're going to get through the money quick, blah, 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 they turned all their business over to the company I work with, $1 billion of business, and shut their doors.
Yeah. And that's why, it's good to do these things through chambers of commerce, because, and other business affiliates I've done these things for, because you want to have a sense of who am I doing business with.
Exactly.
And I am a member of the chamber as well. Any questions in the chat, Kim?
Unless it just popped up, let's see.
Anybody from online, you're welcome to pipe in or ask.
I'm happy to read the questions if that's easier.
I was just going to go ahead and read. Mark asked, can a company file for the ERC themselves, or is it not recommended?
I wouldn't recommend it because it is so nuanced. And even if you're like really good, and Matt will say this too, the firm that I use, they'll go back even if you've already filed and received it, and they'll audit what you did and usually find more money because they're doing it full time.
Right.
I go to the dentist and I look at the x-ray, but I'm kind of relying on the dentist, right? But I can see with my own eyes too. So you may be able to do it yourself. And is it advisable? I would say if you qualify and you're getting money, good for you. But my question to you would be, did you leave money on the table? Kind of thing. That's one of the reasons, even though I was a banker, I always did my taxes through CPAs every year personally, because they're the ones going to continuing education. They're the ones checking everything. And I thought it would be just like me to try to save $300 and cost myself 10,000.
Right.
So that would be my just friendly advice, Mark.
Yeah, one of the
Doctor versus brain surgeon.
I know I have so many analogies. I come here all week.
one of the stories I heard from our firm is they had a potential client that used one of the top accounting firms in the country, and they said they were going to get $330,000 back. And Jorns and Associates that I work with said, well, that doesn't seem right because of the size of your company. So they ran the numbers, and it came back at $1.7 million. So they said, the other company said, well, that can't be right. So they said, well, let's send it to your tax attorneys and let them look at all our figures. And they got $1.7 million. So they almost lost $1.4 million because of who they chose to do their ERC.
Yeah, and that's not a scare tactic. I mean,
No,
it's just, you're free to do what have you. I mean, people ask me for my advice. That's just my advice. But they do take a success fee, so it isn't free, so to speak. But you're not paying out of pocket until you receive the money.
Right.
That's what the legitimate firms are doing.
Exactly.
Now, sometimes if somebody's got a really complicated case, I wouldn't speak for the firm that does it. Maybe they would want to have a little bit of fee up front. So that would depend if something was super complex and took 30 hours to figure out. So just caveat. What else you have, Kim?
Matt is asking which quarters are still eligible for consideration.
The quarter, great question, Matt. I don't know off the top of my head. I'll have to look unless because it's a rolling. I think one of the quarters have already rolled off. So I'm not sure either. So I'll get back to you on that. It started to roll off. I think last quarter.
Yeah, originally it was the last 3 of 2020
Yeah.
and the first 3 of 2021.
Yeah. So we might have lost one of the quarters of 2020. But this is going to go on for another year and a half or so at least. So this will still be around, but you start losing some of the quarters as time passes.
Yeah, and what I understand is it ends on April 15th as far as filing 2024. But at least the firm I
You
work
still
with,
get the money for another year.
yeah, the firm I work with, it, from engagement to getting the check takes about 24 weeks. So if you're gonna wait till April 15th of 2024, you might not get your paperwork done in time.
Yeah. Yeah, that's a good point. Matt mentioned that it is taking 3, 6, maybe even 9 months to get the money. But I tell people file now. Wouldn't it be great, like in the third quarter of this year? You know, you're like all of a sudden money shows up, and whenever it does, you're happy, right? What else do you have, Ken?
Matt, continuing, it's my understanding that you file a form 941X to claim the credit. If so, do you then need to amend form 940 and or 1120?
So we're going to get into sort of questions where I'm going to say you would want to check with your tax advisor. From what I understand, there is going to be an amendment process, likely to at least your tax return. That's what we've been hearing. So I would say be prepared for that, but I'm going to save that one for what a tax professional would tell you based on your situation, because you might have losses carry forward, you might not. There could be some different nuances there. That's why we say it's not really worth it unless you have a couple of employees, because you might have some cost to refile.
Any other questions from online? Anybody?
See, this is strictly on the taxes that were payroll taxes,
Payroll.
Yeah, have to be W-2s.
not wages, not business income. It's just strictly payroll taxes.
It's what you paid into the system, right?
Right.
Yeah, it's what you paid into the system.
And if those employees from 2020, 2021 are still with you, that's fine. If they're not, that's fine, because it's based off of
Yes.
Right.
what it was at the time.
Yeah, I mean, business is not static. I mean, you know, it evolves. People come, people go. So it's not like there's a test to see if those same employees still there or anything like that. It's what you paid into the system.
Because just looking at the term employee retention makes me, and probably most people who are unfamiliar with the taxes and the laws, I would think that means I have to still have my employees because it's a retention.
Well, I would say, and this is tongue in
It's a
cheek,
misnomer, maybe.
I'm not being political, but that's like what was it, the reduction, what was the bill that was recently passed? It was the Inflation Reduction Act or whatever it was, and it didn't really reduce anything.
Right.
So this is just Washington, you know, they put like really nice names on things. And so it can be,
It's misleading.
they're not trying to be misleading, but also too, I have to say, they rolled out these programs so quickly. They got most of it right. And, you know, they evolved, like with PPP, things that weren't right, they kind of like made further fixes, and the fixes were always in the client's favor for the most part. And so same with ERC, because, you know, this stuff all happened very quickly.
Yeah.
So, and when the CARES Act was passed, I remember doing a presentation, I think it was 1,000 pages. I think only 3 people in Congress read it. Everybody approved it. And if that doesn't scare you about how bills get passed around here, I have no idea. But I mean, that thing was like massive. And I remember reading a lot of it. I couldn't read all 1,000 pages, but I educated myself on it. But most of the people, it was all an emergency measure, and people voted on it and passed it and didn't read it. And they mostly got it right. So, you know, hats off to whoever the people are that consult on all that. Do you have a question?
No, but I think he makes a good point, is that for an average person, regardless whether you are a business owner or not, when you hear the word employee retention credit, you would think, hey, it had to be like, I went through all this stuff and I still retain my employees, whether it was from your own personal savings, whatever it was. It makes it seem like I did a lot to keep my employees and make sure that their livelihood wasn't impacted just because my business was. I mean, you have some great business owners. Then you have some right now making news where they're taking tips from waitresses and keeping them for their own. It's just like, what the heck?
Yeah, no, that's a good, interesting point. Every time I do one of these, someone brings up something sort of new, and I've been so used to hearing employee retention credit, almost doesn't have a meaning to me anymore when it comes to like someone who hears it and they're like, well, and you know, I will tell you, these are most American small businesses. They did everything they could to keep their people.
I mean, some people cried and said, you know, those people have also their families. So you have good people. Then you have some others were making news because now they're going to jail and they're gonna fork over whatever the, like what you said about buying a boat. I mean, people buying jewelry, people buying
Yeah.
summer houses or vacation homes.
Same
Like
thing
how
with the
much did
bailout.
that you can afford to all of a sudden get $800,000-$900,000 house plus the, to put a sports car right on your driveway. That is just nonsense.
Yeah, well, whenever there's gonna be government programs, there's gonna be those bad players, and they have shut down a lot of them. I mean, one of the banks that processed tons of PPP loans got shut down, because of so much fraud, one of the online banks, so. Okay, well, let's see, it is 10:30. I think we've covered most everything. Any other questions or thoughts from the group? Hope this was
Did
helpful.
you say you had a list of CPA companies that you're working with?
I have one particular one that I'm working with, yeah.
Okay,
So if people are interested in following up, Matt and I are both members of the chamber here, but what I would say is you can either send me an email. My contact information is on here, or if you want to book a call, just because you have some questions about your situation, feel free to do that. And I'll just make the appropriate introduction to the firm that handles that. And it'll all be full disclosure, nothing hidden or anything like that. So no problem there.
I'd also like to add, spread the word, because, we're a chamber. That's what I've been trying to do for like the last 6 months. I've been emailing like everyone in the chamber, inquiring if they filed for their ERCs, and that's how I got a number of clients, because they said, what's that? They didn't even, they didn't even know about it. Or another one, oh, I'm not gonna qualify because I made more money. And just going back to the kinds of businesses, they can't be businesses that get money from the government. Like it can't be Anne Arundel County. It can't be private schools or public schools.
But nonprofits would qualify.
Yes, nonprofits qualify.
And I think we helped the Central Chamber get theirs, right? I remember that. That was like a year ago, wasn't it, Christy? Something like that.
yeah.
And also private schools.
Matt's asking, what was your comment about CPA needing to sign or you'll be audited?
What I heard from the firm that I work with, that the IRS announced recently that if the 941X form is not signed by a CPA or a tax attorney, that you will get audited. So, and that's why that one company that had $1 billion of business shut their doors and gave it away because they didn't want to get caught.
Most people are familiar, the 941 is your payroll tax form, there's the 940, the 941, and the X is the amended one. So that's the 940X, alphabet soup of forms.
And I'm not sure about the firms you work with, but the firm I work with, if you happen to be audited, they will do it for free for you. So.
Yeah, no, they're gonna stand behind it.
Yeah, I'm sure yours is too.
Yeah, they're gonna stand behind it. Okay. Any other questions?
Matt was asking who just spoke. So,
Matt spoke for Matt.
so Matt Slovic has been speaking and also Patrick has been speaking back and forth. So
Who's Matt on the line? I can't see.
Matt
Matt
Hauser.
Hauser.
Oh, Matt Hauser. Hey, Matt.
Yeah.
Okay. Cool.
All right, any other questions?
Going once, going twice.
Well, thank you. Hopefully, I'll do a pre-close and I'll let Kim and Christy close it out. But I appreciate you guys tuning in and maybe sharing with some other business owners that that this is it's there. You have resources here at the chamber that will help you. And it was a pleasure being able to speak with you all. And thank you, Christy and Kim.
All right. Well, thank you so much, Patrick. We appreciate all this great information. We will send out an email following this event to everyone who registered. So you will have Patrick's contact information as well as Matt's and our staff as well. We will include the recording. So if you missed something or it went by too quickly, you can listen to the recording. So I just want to thank Patrick again with Repeat Consulting for this great presentation. And I encourage you to reach out to Patrick if you would like to schedule a one-on-one, or if you have further questions or want him to help you with your applications. So I know Patrick has some great information about the banking situation right now. He said he'd be willing to share if people want to hang on and listen to that. So for anyone who has to log off, feel free to do so. And then for any of us who want to hear a brief update on what's going on with banking in this country, feel free to hang on, and Patrick can launch into that momentarily. Thanks.
I have a couple talking points on that, Christy. I'll be happy to share real quick.
Okay.
I just pause for one
Go for it.
second. For those in the room, are you willing to let your information be shared with the people who are online, with the chat, name and email?
I'll say that.
Okay,
And also Olivia sent an email with this
Yeah.
sheet already,
yeah,
so.
Olivia sent the handout.
See you guys. So over the weekend, last weekend, you heard a couple banks failed. Silicon Valley Bank, who does a lot in the climate change and tech industry. So a lot of those people have been affected. The FDIC has stepped in and said they're going to insure all the deposits. If you're a fan of Shark Tank like I am, Kevin O'Leary really didn't like that. I'll tell you a little bit about that in a minute why. And just to talk about what that means. Now, I always tell, I was in banking for years, and the FDIC insurance, you can tier it, but you can get a minimum of 250,000. If you don't have that much, you might tune out, but don't, because what I want to share is important. But even if you have more than that in the bank, they can tier it and do some other things to make sure you have coverage. But I always tell people, if you're investing in stocks, which I do, there's no FDIC insurance on that. So it's really just a matter of, this is a good time to just take stock of your investments and where it is and what's going on with it. Part of what is important to note, if you're a depositor of one of those banks and you had more than 250,000, the FDIC said you're covered. But if you're a shareholder, bondholder, you're not. So let's just say that you invest in bank stocks. Maybe you don't bank there, but that bank fails. You could be blown out. That's why this is important. It's not just, I don't have money in that bank. If you have money in the system, just be aware of that. So I've owned bank stocks, and I'm careful about which banks they are and everything else, but this was a run on the bank. I saw a guy post something from one of all of our favorite holiday movies, It's a Wonderful Life, right? And in the 1920s, what caused the bank crisis in 2008 was different than what happened with Silicon Valley Bank and what made happen to some other banks. So Silicon Valley Bank needed to raise some capital. Their balance sheet needed some help. Word got out. A lot of the venture capitalists are like, hey, take your money out of there. And it was a run on the bank. And within 48 hours, the feds came in and shut the doors. Now, your banks will tell you, hey, we're safe, we're sound, we're good, or whatever. But, and I'm not here to sow any fear, but a run on the bank is serious, and that's a confidence issue that occurs. So I want to tell you a little bit what happened. Remember 2 years ago or a year and a half ago when interest rates were real low and you could get a home mortgage for 3.5% and a car loan for nothing percent, and bank accounts you couldn't get any interest rate savings on, right? But now you can get a 3% interest rate on your savings account at a bank, but your mortgage rates are 6, 7, 8%. So, banks in their portfolio hold government securities. And Silicon Valley Bank, like a lot of banks, will hold government bonds, and they weren't paying a whole lot. And all of a sudden, those bonds are at 1 or 0%, and today's bonds are paying a much higher rate. They were just upside down. So they tried to sell that off in their portfolio. They hadn't realized the loss yet. And the FDIC said at the end of 2022, banks were holding over $620 billion in unrealized losses on government securities. So think about your portfolio. You own stocks, say you own stock in GE and the market falls. You don't realize that loss until you sell the stock, right? Well, publicly traded companies are supposed to realize the loss on some things, but they didn't on these securities. So when Silicon Valley Bank tried to sell them at a discount of $2 billion, it caused a lot of panic. And so this thing is catching fire a little bit. Every day, there's more banks that are now susceptible. I never say it right. Credit Suisse or Suisse or whatever they're called, is looking like it's teetering now. Bank out of Switzerland. So if you're an investor and you have stocks, it'd probably be mindful to see what banks, and are those good solid banks that you might be holding some money in or what have you. But also, too, the bank had a high concentration. Your bank's going to tell you they don't have high concentrations and things like that. And there's a lot of great banks. There's a lot of great banks here in Maryland, and I know the presidents of many of them, and they're really strong banks. But they're all having a lot of meetings. So I give you 2 suggestions. Number 1, just talk to your banker. Have a conversation with your banker. Hopefully they've reached out to you. They probably have been overwhelmed. If you have over $250,000, that's a priority for this week. I mean, that just has to be. You have to have a conversation with them this week. And one of the things that happened to all these businesses that had money at Silicon Valley Bank that I feel bad for them is banks typically require you to keep your deposit accounts with them if they make you a loan. And so these banks had all their money with Silicon Valley Bank, and then they couldn't make payroll, and all kinds of problems happened. So the FDIC was quick to jump in. It impacted their business big time. But the news is going to tell you the depositors are safe and everything else. But here's what I'm worried about. All those people that invested in that bank, the shareholders and the bondholders, imagine if you had 250,000 of their stock. You now have nothing. So I think about what happened with bad players, and I'm not calling Silicon Valley bad players, but I'm thinking about what happened with Bernie Madoff and running off with people's money and how upset people were with their life savings. I think about all the people that had the Bitcoin and got when that market crashed. This is like another different type of crash. I don't think it's like fraud on the bank's behalf by any stretch. But if you're a shareholder and you own stock in banks and they're completely blown out, these people have a lot of money. They're not going to be happy. So it's going to affect the stock market. In my opinion, I'm not a stock analyst, but I'm just telling you, like, institutional shareholders of Silicon Valley Bank have just lost a lot of money. And I'm just wondering what that's going to mean for our economy. So I'm watching this stuff really carefully, not sounding the alarm, but I think it's a good time just to make sure you're minding where your money is. That's all I really had on that. There's plenty more to replay as to what happened there. Most banks will separate themselves, and this is what happens, right? Think about your competition. If something bad happens in your industry, you're like, we're nothing like that company. So like if you're in the insurance industry or you're in construction and somebody does something and something bad happens, you immediately go, well, we're not like them. And so that's what you're hearing from all the banks. We're not like Silicon Valley Bank or what have you. But fundamentally, all banks operate on a highly leveraged ratio, meaning that for every dollar of deposits, they can lend out $10. So it's like the movie. People come running in, and George Bailey says, well, your money's not here. It's in his house, and it's in her house. And so a run on the bank is serious, and that's why the feds have jumped in so quickly. But Kevin O'Leary, to close it out, said he feels like they just nationalized the banks. He sounded like when George said Potter just bought the bank, if you remember from the movie. So A Wonderful Life. And Kevin O'Leary's contention is that by ensuring depositors are safe and blowing out the bondholders and the equity and shareholders, that they've just nationalized the banking system, and now bankers don't have to worry about it because they'll take on more risk. I don't know if that he's right, but at any event, it's interesting news to listen to. That's all. Thank you.
It is. All right. Well, we're going to go ahead and end the Zoom unless anybody has a question for Patrick.
All right. Thank you, everyone. And thank you again, Patrick. Have a great day.
All right. Bye, everyone.